Hello guys, in this video we try to see the IPOs which are the public initial offering. It means new companies that they get listed in the exchanges. Okay, now most of these companies fail at the beginning. It means the first year, the second year, the third year, it depends on the stocks, and then they go back again. Okay, and they reverse and they become very good companies in the future. Not all of them, okay? And some of them, they will go to 1 cent or 3 cents, and then they get delisted again because they can't stay in exchanges because, let's say, for example, a New York Exchange or Nasdaq, or they have some rules, okay? If a stock doesn't have certain price, it should be delisted. So they ask the company, either they do a split. It means, let's say the stock is $1. They ask them to put it like $10. It means they sum up 10 shares together to form one share. Okay, just to be above the threshold that the exchanges have done. Now, you try to see why these companies, they are new, they get listed into the exchange into the stock market, and there is an enthusiasm. All the people are happy, and this company, they get a lot of money from investors because a share that it is, for example, 50 cents or $1, and then when they sell, it open at $10 or $11, so it's a lot of money for the company. Okay. And why these companies don't succeed in terms of price? Just because sometimes analysts, they don't cover these companies. Now, what does it mean? Understand that a lot of companies, they have analysts speaking about them all the time. For example, I will just give you an example. Check, for example, Tesla, Google, Facebook, Amazon, and all the other stocks. They always speak about them. So they are very, very famous. And the people, when they want to invest or something, they go to these kind of stocks. Oh, they say, oh, Google is good, all the years is good, they go. That's why they put their money, they buy. So the value of the price is going up always. Okay? Now, second thing is investors' hesitation to buy these new companies. They hesitate. Now, what does it mean? It means these investors, they have a lot of money, and they want to invest in new companies, but they don't know what is the background of this company. Is it making real money in the past? Or is it a reliable company that will grow? And so what they do, they will wait. They put it like a good stock. If it is a good company, they put it in their portfolio, but they don't buy it until they see the earnings and they see the growth in the real company. It means most of the time it's earning profits, because these companies, they will release their information to the public. Now, you, for example, any company that you like, that you want to see the financial statement, you just go online and you find the financial statement, and then you see if this company is making money, each quarter, is it making money, and is it good with the competitors? It means a lot of stuff that you should see. This is in terms of investing. So after 1 year, 2 years, 3 years, some analysts, they begin to speak about some companies when they begin when they begin to see the trend. They see the stock, it was $2, $5, and now it is $10, $15, $20, $30. So it attracts attention. Why? because a lot of investors, they begin to buy. They are just simple investors. It means they have money, yes, but they are just investors, and understand that it's not only from America, it's from the whole world. You know, anyone in the world right now, he can make an account and he can buy Google or Facebook or anyone. So our stocks, it doesn't belong to us like USA only. It attracts investors from all over the world. Okay? So we say analysts, investors, and another thing that I can say, we say analysts, help. Second is investors. Third is something obvious, is the price itself going up. You see a stock going up from $10, it goes to $2 or $3. And then from $3, it goes to $5, to $7, $10, $15, $20, and the stock becomes to become good. Now, for you guys who want either to do swing trading, short-term trading, or to do investing. To do investing, first, before you do investing, you can use my strategies to assess the trend, to assess the price, because this is the most important thing in stocks, is to understand the price. If the stock is going up, it means there is someone behind. Now, if it goes $5, $10, $20, it means there are some mutual funds that begin to buy. And some long-term investors begin to buy, because those guys, they understand that it's not 1 year or 2 years that they see big results. They should wait. They buy and they wait. They have money to buy and wait. And when the trend begins, it means when the stock begins, you begin the media speaking about this stock. A lot of swing traders, they buy. Day traders, they come and they begin to trade these stocks, because, see, I will tell you something that most of the people, they don't realize. Why, for example, penny stocks and small stocks, even stocks that are $10, $20, sometimes you find them with a low volume. You ask yourself why they are low volume. Because most of the people, they don't know about them. Now, who are these people? Day traders. Okay? Day traders, when the stock begin to be known, they come and they trade it, because they trade it every day. There are some people who are specialized in one stock, because they know how the stock moves. So each day in the morning, either they are shorting the stock or they are going long. Okay? Now then, after a few years, you see the volume changes and becomes bigger and bigger, 1 million, 2 million, 5 million, 10 million, and these stocks become stronger and stronger, $40, $50, $100, $200. Now, most of the people, they don't buy on time. They leave the stock. I see, for example, I showed you guys a stock called Square. From $11, it goes to, from $11, it go to $99 in few months. So when it was going up, no one sees it. Why? It's just because it has not been advertised a lot. Some stocks, IPOs, are like that. So if you take my strategies, it means how just to discover this kind of stocks. And just follow them. Even if you don't want to, you can buy some shares and try. Believe me, when the stock begins to trend, it doesn't stop until it reaches certain amount of price. And this is what always we are looking for. So, like us, swing traders or short-term traders and investors, it's the same thing. The only difference between us and them is that we don't look to companies' information, statement, earnings, because we are not staying that long. We stay 1 month or 2 months, 6 months. We don't want to stay that much. Just we follow the trend. But there are some companies that the people, when they buy, they wait for 5 years, 10 years, 20 years, and they become a very good companies. Okay, so thank you very much for watching, and if you have questions, please ask always. Thank you very much.